I'm going to do another quick update on the currencies and the metals. I think most market participants at this point realize that there really is no market in the currencies. We've just got central banks going back and forth, um, trying to suppress their currency against their neighbors. This is one of the reasons why I will never trade currencies again. They are the most heavily manipulated markets on the planet, and at this point, I don't even really think we have a market in currencies. We've just got one central bank intervention after another. Um, uh, Last week, I said the ECB would come in, try and reverse the currencies. This is potentially a top in this daily cycle, be a left translated top. Said the ECB would come back in, they would use the 100-day moving average to try and help them turn the dollar back up and weaken the euro against the dollar. That's exactly what they did. Um, the natural tendency, of course, is for the dollar to go down. We're heading into a rate cutting cycle. That's the only thing that has kept the dollar propped up for the last several years to begin with. And now the not only are the rate hikes done, but the Fed is now starting a rate cutting cycle. And let me be clear, uh, the rate cutting cycle doesn't have anything to do with the economy. It's simply um, every other country in the world is um, manipulating their currency, and if we're going to stay in the game, the Fed has to get back in the fight, and otherwise, all the other countries are going to succeed in lowering their currency and disadvantaging the United States. So we've got to get in the fight, and the only way to do that is to start cutting interest rates. So um, earlier today, the odds were actually about 70% for a 50% rate hike, and that was enough to collapse the dollar back below the 200-day moving average. It made a lower low. Um, I can tell you, this evening the ECB attacked again, tried again to force the euro down. I just there's not going to be any natural buying ahead of a rate cut, and especially one where there is so much um, indecision as to whether or not it's going to be a quarter or a half point. If the Fed cuts a half point, everything is going to take off to the moon. Um, I think uh, obviously the metals are already, they've been anticipating the rate cut for a while, and at this point they may be starting to anticipate a half point rate cut. Um, you know, I'm sure the ECB is not going to give up without a long and arduous fight, but as of right now, they were not able to push the dollar up and make a higher high, and um, as of the close on Thursday anyway, they were not able to keep the dollar uh, above the 200-day moving average, and it's made a lower low. So I don't expect this to get any easier. It's just going to be a back and forth battle, and we may just be stuck in a range for several years. But I think most market participants at this point understand that there really isn't a market in the currencies, and that everyone is just printing, trying to suppress their currency against their neighbor. And at that point, it may just boil down to gold really doesn't care where the dollar goes anymore, as it's not really relevant. Um, it doesn't whether the dollar goes up or down isn't um, a sign of dollar strength or weakness. It's just which central bank happens to have the upper hand on any uh, particular day. All right, and then moving on to gold. The gold did break out of the triangle pattern this afternoon. These are continuation patterns. I've been saying for weeks now that the odds are very high we would break to the upside. That's what we've done. Um, Very often this is like a midpoint consolidation. If that's the case, this was 170 points. You would expect maybe 150 points on the rally out of the halfway point here, which would put gold somewhere between 1550 and 1600 before this tops. I think a realistic target for this daily cycle to top might be the FOMC meeting, um, depending on whether they cut a quarter point or half point. You could get a sell the news type of event, but if they cut a half point, I think the sell the news would not last very long. It would just be a quick move down into a daily cycle low, and then I think we would have another leg up if they cut a half point. So I do think there's a good possibility that this part of the move, the strong momentum move we've seen here, and then that we're starting to see coming out of this consolidation, is likely to have run its course um, by the time the FOMC meeting happens at the end of the month, and then things will probably settle down, and it'll get more difficult to make money. There'll be more ups and downs. Um, but right now we're in a very strong momentum move. These don't happen very often. We've seen, I guess, three of them in the last 4 years. One was the baby bull in 2016. One was the move in stocks into that 2018 top, and now we're getting one here in gold. So, you know, they don't happen very often. Enjoy it while it lasts, and then once it's over, we're going to go back to a more normal market where it's harder to make money, more volatility, more give and take on either direction. But for right now, we're in a pretty strong momentum move, and we've broken out of the consolidation.